What's up, guys? Dirk here. Happy Monday. Hopefully it's a happy Monday for you and you had a nice relaxing weekend. I know these markets are crazy right now, but hopefully you've been on the right side of this and you've been prepared for this. Hopefully, because I've been sharing this for a large part of the year, the potential for this downside. Now, of course, I didn't expect that FTX would actually blow up, that would cause that final capitulation, but technically we have been looking for the potential of low to mid teens for a while, simply because that's exactly the same drawdown as in 2018, about 14,000. So in terms of just looking on the chart, technically this is still very much quote unquote normal for the crypto market. So in this video, I just want to give you a quick update since we just had the weekly close. I want to give you some levels to watch, and I'm just going to try and make it as practical and useful for you as possible in this video update. So if you are new, welcome, smash the like button, subscribe down below, click the first link in the description if you want to get on my email list. That way I can just send you an update if there's anything important or when I upload a new video. And the easiest way to stay up to date with what's happening in these crazy markets right now is to join my Twitter. It's free. The link is in the description down below, or my free public Telegram channel. Link is also down below. So let's start out by looking at Bitcoin, and you can see big red week, one of the bigger ones. Again, we've seen this multiple times throughout the bear market, but this is a pretty big one after going sideways for multiple months now. We had the initial bottom over here, the local bottom, in the middle of June, which was predicted by the 3-day death cross. Now, then we went sideways for multiple months, and that was that support of the previous all-time high. And the rule in technical analysis is most of the time when you see the price coming in a bearish trend and then sitting horizontally and testing the support while making lower highs, the likely result, the majority of the time, is a breakdown of that support. That's simply how it works, because every time it tests the support, it means buyers have to step in and prevent the price from dropping. So every time buyers are running out of ammunition because they're going to have to spend their capital to hold the prices up. And then every bounce, when you see it making lower highs, it means that the sellers are stepping in every time a little bit quicker until eventually the bulls can't support that and they can't hold the support anymore, and then it just breaks right through, usually pretty violently. And what tends to happen is also we tend to have more of a follow through. So if we would have pulled back up, if this would have just been a weekly candle with a wick below it, pulled back up and closed above the support, that would have been a much more bullish sign. Right now we had a massive breakdown and we closed at the bottom of the weekly candle. So now, in my opinion, this is more bearish and likely warrants follow through. The question is going to be, do we just go straight down from here? The likely target is still what I've been talking about for probably a couple months now, that fair value gap on the weekly chart, and this horizontal support resistance historically. That's just the next level. You can see it in between these two levels. It's basically just thin air. There's not much support here historically. So likely this is just going to continue lower, and the top of this level is maybe about 13. The bottom might be about 10, depending on how bad things get. Fundamentally, I don't know if we're going to see anything more crazy. Are we going to see another exchange become insolvent? Are we going to see more really big problems in the space come to light as a result of what happened to FTX? If yes, we can drop to the support. We might even be able to wick below it if things get really, really crazy. So be prepared for everything. On the upside, it is also possible at some point that we get a short squeeze. I don't think there's any real reason, no one is really going to be bullish at this point. Institutions are probably really scared, probably getting out of the market if they haven't gotten out already. And it's very unlikely that any institution is going to step in with big money due to what has just happened, because at this point in time, basically, there's no guarantees, there's no safety of exchange or anything like that. So it would be completely irresponsible for a company or institution to get involved until there are guarantees or insurances or regulations in place to prevent the whole FTX thing from happening again. So more likely, even if we do get some upside, there's a lot of people probably that are looking to get out on any bounce. So short term, I'm thinking any bounces are probably good short entry points. And what I'm looking for now in terms of becoming at least a little bit more bullish or potential for bullish is to reclaim the level that we broke down from, which is currently about 18.7, 18.8. At the very, very minimum for me to start looking at, potentially are we bullish again? And then of course over time, if we continue lower, we have the bullish divergence in place, maybe we go sideways for multiple months, then things start to change a little bit and we can look at that down the line, especially if we can properly reclaim the 3-day 50 moving average, which we have not reclaimed. We got rejected from it twice. So that point is approximately about 21,000. So at the very least, for upside scenario, we want to look at least 18.8 and a weekly close back above there. But really just 21K, which is the 3-day 50 moving average. Until then, the risk remains to the downside, probably somewhere between 13 and 10,000. And if things get really, really bad, I can see us wicking below the $10,000 level. In terms of Ethereum, looking at the weekly chart here, you can see it's currently trading at 1188, and this is just bearish. Like, we had a huge red candle, the same as Bitcoin, and this all looked promising. We bounced off the 200-week moving average. Things were looking good, massive red candle down, and now we closed below that 200-week moving average, and that is simply just a bearish signal, and there's no two ways about that. So at the very least, to get more bullish, we need to reclaim of the 200-week moving average with a weekly close back above it. So that's 1346 above there with a new weekly close. But ideally, we need to get back above this high, which is 1680. Until then, it's basically just bearish until proven otherwise. The likely target is probably at least sweep these lows over here of $900. You can see there's also a fair value gap here on weekly, and it is this resistance over here from 2018. So likely we go into that zone, which is anywhere between, let's say, $900 and $700. If we can find support there, we'll obviously have to look how things develop, if/when it gets there. But if things get really bad, which I do think there is still potential for, then we could basically drop back down to the next level, which would be around this level between $300 and $500. Also something which I've been saying as a potential if things get really bad. I've been saying that for the last weeks, or maybe even the last few months. You'd have to go back and look in the videos there. But also, this level, this $300 to $500 level, would be the same drawdown or similar drawdown as 2018. So once again, technically, it is very much in line with the previous bear market. Pretty much the same timing. This also happened in about November, December of 2018. So in terms of a repetition of the previous market cycle, things are very, very similar. Even though it may seem crazy right now, we don't know what's happening in the space. FTX is blown up, billions of dollars are gone. We don't know what the contagion is. That is all the fundamentals. Based on the chart, $300 to $500 is perfectly in line with the previous bear market. So even if that happens, as crazy as it may seem to go back from almost 5,000 all the way down to $500 or maybe even a little bit lower, that seems ridiculous, but it's the same thing that happened in 2018. And that is why it's so important to understand these charts, to be able to identify these trends, because the swings in crypto are just crazy, and you want to be able to get out at the right times, or maybe even be able to short on the way down. And then when the market comes to an eventual low, that is the ultimate time to buy. 2018 was the ultimate time to buy in November and December, because you can see the huge run that came from it. So if we get to $300 to $500 in that range, in my opinion, it's probably going to be the generational buying opportunity once again for Ethereum for the next cycle. But again, of course, we'll have to wait and see if/when it gets there, what the charts look like, what's happening in the world, and so on and so forth. So basically, that is my zone of interest that I've identified, as that would probably be a really, really good long-term entry. But again, we have to assess the situation when it gets to that level. We can't just blindly go and buy, depending on information that comes to light, market conditions, etc., etc. But like I said, for now, the trend is bearish until we can at least reclaim the 200-week moving average with a close above it, and ideally even just get back above this high at 1600. Until then, we're looking at lower and potentially as low as $300 to $500, in my opinion. Now, a quick look at the SPX, the stock market, because things are very, very different here. We have seen crypto completely decouple from the stock markets and not in the way that we'd like to think, you know, where everyone was always saying, oh, the stock markets are going to crash and then Bitcoin and crypto are going to go up as a flight to safety. We're seeing the exact opposite. We're seeing stock markets pump. Last week was a big green week in the stock markets. We bounced off the 200-week moving average here in red, as you can see, which has held the longer term bull market for many years at this point. So that is a good sign. Bouncing from it for the bulls, it gives hope. When we close below it, there is risk. This was a 17% sell-off, and of course closing below this puts us at risk for a repeat of 2008, which was a further 50% sell-off. So as long as we're holding this 200-week moving average, things are good. But at the same time, we are stuck between the 200 and the 50. And if we get rejected from the 50, again, that is potentially more bearish. If we get back below the 200, like I just said, it's really bearish. So the key is going to be for bullish continuation. We want to get back above the 50-week moving average here in blue with a weekly close above it, because you can go back every time we cross back above it from bouncing from the 200. You can see we had these long, strong trends in the market and we had really strong bullish upside. You can see over here when we cross back above it, big run up. Over here, big run up. So this is going to be key to watch in the next couple of weeks. Are we going to be able to get back above it and reclaim it? You can see it was rejected over here, but it bounced over here. If we can get back above that, I think there's a decent chance we run all the way back up to the all-time highs, maybe even set new all-time highs here for the S&P 500. So that is going to be the question. Do we get back above it and reclaim it, or do we reject it? And based on what is going to happen at that point in time, we can assess our strategy and basically the probability of the trend changing in a certain direction, whether that's bullish and potentially a new bullish trend for months or a year or longer, or whether it's going to get rejected and potentially continue to the downside and set new lows. So that's something we have to keep an eye on. Set your alerts at these various moving average levels and let's see how that develops. And then finally, let's have a quick look at the US dollar. So the dollar index chart over here, because as I've shown you before on the channel, you can do a search for that, I'll try and link to it down below, is when the US dollar index moves up, in general, stock markets and crypto tends to move down. Once we have the dollar index moving down for extended periods of time, multiple months or over a year, that's when we tend to see the crypto bull runs. The crypto bull run in 2017 was this move down in the dollar index. The 2020-21 move, bull run in the crypto markets was this move down in the dollar index. So we've had our entire bear market here as the dollar index was going up, and now we've just seen this big candle down last week, which was good for the stock markets, as I've just shown you, but because of the events within the crypto space and obviously the bankruptcy and insolvency of FTX, the inverse correlation obviously didn't play out with crypto. But we are looking for, if we get an extended multiple month downside move in the dollar index, that could potentially create a bullish trend in crypto. Now, of course, even this move down, as nice as it may be, is still no confirmation. What we need is a weekly close back down below the 50-week moving average, because until then, it could just be a pullback and a continuation and continue higher once again. And as you can see over here, this is where we got the confirmation in May 2017. And if you remember, you can go look back on the charts. May to December, we had a massive run in Bitcoin and crypto. Okay, that was the bull market. It started a little bit earlier, but once we got that confirmation, there was plenty of upside left. The same thing over here, you can see this started in June 2020, and as you know, you can go look back on the chart, we started a major crypto bull run towards the end of 2020 all the way to May of 2021, which is really when the dollar index bottomed over here. So because we are so far from this 50 moving average, this pullback can be pretty deep, but we have to watch out because it's also the horizontal level of these previous highs. So this level is going to be key, I think somewhere between 103 and 100. If we can bounce there, we have to be careful if this trend continues moving higher after a bounce, because that would put more pressure, bearish pressure, on the stock markets and probably keep crypto pretty suppressed until we can get a breakdown. So what we're looking for, close below the 50-week moving average, and ideally so below this currently 103 level. Ideally get back below 100 and then hopefully take out these lows over here under the 90 level. That is a possibility. Once we start getting that, things start to look a lot better for the upside for stocks and for crypto. So that was my weekly update with levels to watch. I hope you enjoyed it. Smash the like button, subscribe to the channel if you haven't done so. Feel free to leave your thoughts in a comment. I would love to hear from you. Any questions that you have, any ideas you want to share, leave them in a comment down below. I'll try to respond personally where I can. And stay safe out there, manage your capital. That is the most important thing. Preserve your capital, because if you have capital, you can always participate in new opportunities and you can always still make money. If you don't have any capital, you can't make any more money and you're out of the game. So the number one rule is always manage your risk, protect your capital, and then you can continue to look for asymmetric bets and good opportunities.